Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Well, welcome to another episode of Kiss My Assets. I'm Jamison Manwaring, CEO of Neighborhood Ventures, and we're excited to have a special guest with us here today, Kimberly Taynton, who is the VP and Senior Underwriter for BWE, which is, I'll let her explain a bit more about the company, but she focuses on underwriting HUD financing. And we're also going to talk more about that here in a minute, but wanted to welcome you and thank you for coming, Kimberly. Thanks for joining us.
You're welcome. Thanks for having me.
You had a long drive here from Scottsdale. That's where you're
Actually,
located? Or
our office is located up in Scottsdale. We're in the DC Ranch area.
yeah.
I actually drove from my house on South Mountain, though, because I was working from home today.
Yeah, that's great. We're closer to South Mountain, and
Yeah.
we're closer to your office than you would be going to DC Ranch. Just curious, how many days a week are typically people in your office working from home versus in the office?
We are working from the office between 2 and 5 days a week, depending on the person. Some people really like going into the office up in Scottsdale, but my team generally works 2 to 3 days a week in the office.
Yeah, it seems like that's becoming a sweet spot for a lot of people, is the 2 or 3 days per week. And I like to ask that from anybody just to kind of see the pulse out there. Obviously, we know that's been a big change as more people work remote. And what do you think about that? I'm with that commute, that saves you quite a bit of time.
Yeah, that is quite a commute for me. It's about 45 minutes each way
Yeah.
without traffic.
Yeah.
I usually try to miss the traffic by going in early.
Yeah.
But it helps a lot. And especially on days where all you have are conference calls, it's like, why are we even coming into the office for
Absolutely.
this?
Yeah, absolutely. Well, we're excited to have you in here today to join us. I have a lot of questions for you that are for my own personal education. Anyone who has worked in with anything with financing, with securing debt, in particularly from a government agency or a government sponsored agency, knows there are a lot of details to it. It can be cumbersome. A lot of people say, I don't even want to deal with that type of loan because of all of the red tape. But we also know there's a lot of benefits to those programs if you can qualify for them. So we're excited to learn more about that today, specifically the HUD programs that you have been working in. But before we dive into that, I'm also curious, how did you get to this place where you're now vice president and senior underwriter of a major real estate lending company? I wouldn't imagine when you were freshman in college this is where you thought you would go, but who knows? How did you get here?
Oh, so that's a really great question. 25 years ago, I started by working for a real estate developer who was he was building apartment complexes using HUD insured financing. And he hired me as his development assistant, sort of like a secretarial administrative assistant position. But he recognized that I had a bit of an aptitude for development. And so he said, I want you to just focus on all of the new construction apartments that we're building. And so
Wow.
that's where I got my start. The lender who lent on all of his loans, which were all 221D4 HUD loans, I ended up going to work for them after I left his employment, and worked there until 2006. And unfortunately had to take a little time off because I had a bad accident, and came back to work in the workforce in 2008. And I went to work for HUD. And over the course of 5 years working for HUD, I became the production chief for multifamily development in Arizona. And so I did that for quite a number of years, and then I was going to have to move to either San Francisco or Washington or Denver, and so my former employer, who was the lender, came and said, "What do you think about coming back to work for me as an underwriter?"
Excellent.
And so that company was Paragon Mortgage. And we merged with Bellwether Enterprise back in the end of 2021. And so we've been at the Scottsdale office with Bellwether since then.
Got it.
And it's a great company to work for.
So when you said you worked for HUD, were you a federal employee
Yes, I was.
of the
Yeah.
federal government? Okay.
Yep.
And just out of interest for listeners, how do you compare working for the federal government? Because there's not that many people who actually ever work for the federal government, and there's many different capacities to do that. But how's that? How is that? And then how is it working compared to just a private company?
So, one of my challenges working for the federal government was the pace. I was used to working in the private sector where everything is now, 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 now. We have to have it, and I really had to force myself to like not have that expectation
Oh yeah,
working for the government
you
because it doesn't happen as quickly.
you have to be patient now.
Yes, I did have to work on my. They said you need to work on your soft skills and be more patient with your coworkers because I had very high expectations. But it was really good for me. The government was a good employer. It's difficult to supervise people. I was a team lead, and supervising people working for the government is a little difficult at times. They're unionized, and you have a lot of that bureaucracy to deal with too. And I wasn't used to that. I was used to working for smaller companies that aren't they don't have the siloing between the different divisions.
Things are more efficient,
Yeah,
and if somebody is not performing, you can get in there and make
yeah.
changes if needed quickly. Yeah.
Exactly, yeah. So, I actually think that coming back out to the private sector, it just suits me better.
Well, what I like about your story is that you've done both, because it tends to be people are either in the private sector or they're working for the government, and they never leave because you get used to it, right? And
Yeah,
we need more overlap and more back and forth, because both sides can benefit definitely, and especially the institutional knowledge you were able to gain when you work at HUD. That's something that you can't replace that experience.
that was really helpful and also helpful to my employer now because I do
Absolutely, yeah,
have that background and I also still have a lot of the relationships that go with that.
yeah.
So,
And I think to start off, the I want to make it clear why this is an important conversation right now. We are experiencing in commercial real estate a big slowdown, in some cases a freeze of lending by regional banks, smaller banks who typically fuel a lot of that lending. And with this is an important thing when you're an investor in real estate, because financing is such a big element of owning a property, of the value of the property, of the potential cash flow that comes from the property. And one of the things that is so important about owning multifamily are the options for lending that come from the government, HUD being the direct source, and then also Fannie Freddie, which is more government sponsored. And so we wanted to have you in to understand how financing from HUD works for multifamily, because so many of the traditional lending options, or the common lending options, are now it's either frozen or it's moving so slow it looks like it's frozen. Those options have really gone away. And just to start out, have you seen that? Have you seen an increase in folks turning to HUD, or volumes about the same? And then what else are you seeing when it just comes to the lending market in general for commercial real estate?
oh, there's absolutely been an increase in how popular HUD insured financing has become. And I just wanted to clarify one little part of it is that the loans are not coming from HUD, they're actually coming from the Ginnie Mae investors on the secondary markets. The lenders, us, we actually are lending on it, but they're securitized
Yep.
by the Ginnie Mae investors. HUD insures those loans, which allows you to get better terms on the financing and much lower interest rates as a result.
So
Um,
HUD comes in and says, these loans, if they default, we're going to have a backstop for you as an investor,
as a lender.
as a lender.
Right.
And so folks who have their money there, it feels a lot better to know that HUD has that insurance.
Absolutely. And the reason why it has become more popular, especially this year, is that there has been a huge pullback in the amount of lending that's happening, especially on the construction financing side. The banks have really pulled back, or their requirements for money that you have to deposit with them, their deposit requirements are very, very high, and their terms aren't very good. I mean, 50% loan to cost isn't that great, especially with the interest rates at 9% on some of those loans. There's really nothing in the debt funds. The life companies have pulled way back as well. So HUD insured financing has become extremely popular for construction loans, especially. The HUD offices are very busy right now with many concept meetings to see which deals are going to work. And that's kind of a big reason why I'm seeing it.
Are you able to is HUD able to insure kind of an unlimited amount of loans, or is there a requirement, a cap on how many they can insure? So now they're seeing much more demand.
Yes.
Is there a concern that HUD says, hey, this is all that we're going to insure, or how does that work?
It really has to do more with the market demand than anything else. I mean, they will actually cap the number of loans that they want in a particular market if they see it being oversupplied.
Okay.
So that's one of the main issues. There are markets where they are pushing back a little bit on the amount of interest, like Austin, for instance.
Okay.
There's a lot in the pipeline for new construction there. Now, whether all of that is for real or not is another story, because we see those, projected developments or planned developments, but are they actually getting financing?
Yeah.
If they're not going with HUD right now, they probably aren't because the terms are going to be too extreme for them. Phoenix is also an area they have had some concerns about the amount of pipeline and the supply, but you really have to break it down by submarket every time you're looking at any deal here. So you're going to have submarkets that are showing that they have, like downtown Phoenix, they're concerned about the number of units that are coming online there. But in the East Valley or in the West Valley, they may not have those same concerns.
Makes sense. And they can come in and make their voice heard on those areas. And then are there any areas where they're saying we're not lending right now, or they've just said, hey, kind of yellow light, hold on a minute, and a few?
Yeah, it's really more of a yellow light situation. In Even back during the mortgage crisis during 2008, 2009, HUD was still there. When all of the other market participants were gone, when all the other lending sources were gone, you still had HUD working and doing loans because the government realizes that they need that. You still have to continue financing apartments, whether it's a refinance or new construction, and not
And
just that, senior housing as well.
yeah, you mentioned that it's multifamily and senior housing. So this is really, HUD is housing and urban development. So
Yep.
it is kind of the backstop, right? The safety net, so to speak, to ensure that housing continues, and that there's a way to finance it. Uh, in a typical market, why do real estate developers, kind of overlook the HUD options? Why is it not the preferred option? Why do they go to the private guys if they can?
Well, for refinances, I'm not exactly sure why they think it possibly has to do with the time. It takes a little bit longer to process an application for a HUD loan.
How long does
There,
it take?
for a refinance, for about 5 months
Okay.
from start to closing. For a new construction deal, it can be 9 to 12 months.
Yeah.
And probably closer to 12. It really depends a lot on the stage of the plans and how far along they are in the process. We can do expedited applications now on new construction for experienced developers if the plans are far enough along. And there's no environmental issues. So, environmental review is another aspect that is a little bit more difficult with HUD deals. They have a more stringent environmental review. And they also have specific reserve and project capital needs requirements on refinance projects.
So fair to say that it's more conservative generally than what a developer could get at a private bank.
Yes, it is.
More arduous, more rigorous underwriting standards.
Yeah.
Why does it take that long? Like, just from a total naive outsider to think to refinance an existing property. We have some lenders that will refinance that in 2 or 3 weeks. They'll look at the financials and they'll say, "Hey, this thing makes sense." Why does it take that long?
It takes a long time. First we have to start if it's a refi. So first we start by ordering third-party reports. Those tend to take about 6 weeks to come in. And then the underwriting takes another 2 to 3 weeks after that. And it takes HUD about 60 days to review an application.
So
And
that's kind of the all-in time, and a lot of that's done. The initial stuff is done by like your company,
yes,
the
yeah.
underwriting, the whole package, and then you submit it
And
to
then
HUD.
we submit it to HUD. It takes them 60 days to review. And then it takes about another 45 to 60 days to close on the loan after that. And our underwriting is significant in comparison to what you would see from like a Fannie or Freddie. Um, my average underwriting narrative for a 223F, which is the refinance program, is about 80 pages of
Holy
narrative.
cow! Yeah.
Because that's what is required to present to HUD and show them that we've reviewed every single aspect of that application.
Yeah.
And then for new construction, I'm probably about 100 to 120 pages by the time I get through the entire thing
Wow.
on a 2 to 3 stage process.
And just from your opinion, how much of that is excessive, and how much of it you actually think this is pretty just good due diligence? Is it 99% of it's good due diligence, or is 50% of it red tape that wouldn't need to be there?
I'm thinking more like 80/20.
Okay.
80% good due diligence.
Yeah.
There's a reason that you get better rates with HUD loans is they seldom default
Yeah.
because they're underwritten very carefully.
Yeah.
And you have that oversight and you have that review. I would say 20% is probably way over the top, in my opinion.
Yeah. Well, and that
Yeah.
is the nature of government in general. So
Yeah.
but I'm glad to hear it's 80/20 positive, not vice versa.
Right.
I've done some work in outside of the U.S. and Mexico and other places, legal systems and other things, and even though things here are slow, like this compared to the way things work outside of the U.S., we still have it. We still have it very good,
Yeah.
and so that's still positive. As you underwrite loans now, maybe like on a refinance, what are the terms looking like? Kind of the rates and the loan to value, and obviously it depends a lot on the property. But
Yeah.
if it's a good property and someone's looking to do a 70% loan to value,
Oh, yeah.
is that high? Or
No. Actually, 223F loan program, that's the refinance program. You can go up to 85% loan to
wow.
value. And the debt service coverage ratio is less than you would see in other lending sources.
Hmm.
It's the minimum of 1.176
Yeah.
instead of 1.25 or 1.30 that you might see from other lending sources.
Yeah.
So you're able to get more loan proceeds on either a debt service constrained mortgage or on a cost constrained or value constrained mortgage.
Do the owners have to guarantee the loan on HUD?
No, it's
No.
fully non-recourse.
Yeah.
And for new construction, it's non-recourse through both construction and the permanent side. There are bad boy carve-outs you have to sign that you
Yeah.
won't, commit fraud against the property. Another feature of HUD programs that's important to mention is that there are mortgage insurance premiums that are applicable to all HUD insured financing.
No matter the LTV?
Right,
Okay.
throughout the life of the loan. And that's the backstop. That's the mortgage insurance that you're paying for. That HUD is giving you a commitment to insure that mortgage, and you're paying for that. That money goes into the Mutual Mortgage Insurance Fund, and that is also what helps HUD stay solvent. So HUD's one of the only government agencies that completely pays for itself. And it's because of those things.
All right. Hey, we like to hear that.
Not the subsidies. The subsidies are earmarked by Congress, and that's a different bucket. But HUD
But-
as an agency is self-supporting.
Yeah. No, I mean of the government programs, it certainly serves a great purpose. in the market, and I'm happy to hear that it financially self supports itself.
Oh, the other thing about the 223F program, it's actually a 35-year mortgage term, fully amortizing. And for new construction, it's 40 years.
Wow.
And that's something that you don't see elsewhere in the market.
Yeah.
Is 40 years fully amortizing. And on a new construction deal, the interest is actually capitalized into the mortgage and drawn down during the mortgage, term, or the construction term, I should say. And after that loan is converted over to permanent, that's when your 40-year amortization
Oh.
starts. So it's almost like a 42-year loan.
One of the big things with commercial real estate lending are prepayment penalties,
Yes.
or what's the other? They call it
Debt
interest.
yield. It's a yield maintenance.
Yield maintenance.
Yeah.
Prepayment penalties used to be very common with home loans before the financial crisis. People would have these big prepayment penalties if they went to refinance. Not so frequent anymore, but with commercial real estate, that's a big element. How is that with HUD loans? Are there yield maintenance, and what does that look like?
It isn't yield maintenance. It's actually a standard 109876 reducing per year 1%. And it makes it a little bit easier to plan for and calculate as opposed to a yield maintenance type of a prepayment penalty. But it's fairly standard as that 109876 all the way down to 1% per year.
Yeah.
But there's no lockout period. You could refinance it in year 2 if you wanted to, or year 1, but nobody's going to do that because the prepayment penalty will be 10%.
Right.
But one of the other interesting features about HUD loans is, like, right now, a refinance is going to be about 520 to 540 on the interest rate plus MIP.
Yep.
MIP rates for a newer refinance are going to be about 25 basis points if we can get a green certification.
Okay.
The same for new construction, but the interest rates are about 610 today. So you're looking at much higher than a lot of us are used to or would want to see on the interest rates. But say your interest rate drops in 5 years. You can do something called an administrative process called an IRR, which simply resets your rate at the existing
Wow.
remaining mortgage term at that lower rate and re-amortizes your loan
That's
at
excellent.
the lower rate. Now, you do have to bury that prepayment penalty into the rate, or come up with cash, but we can usually bury it into the new
Okay.
rate. There's also another option. You can do something called a 223A7 that even resets your mortgage term back to the original term, which helps you on the debt service coverage side, and then that also reduces your rate.
Wow.
And we also bury the prepayment penalty into that.
Well, I think one thing that strikes me is it's just not that common to have underwriters on podcasts.
Oh.
Because there's always kind of a, hey, what does that loan do? Hey, what are the options? The underwriter is the one that actually knows knows it all start to finish. So it's great to have your insights with the prepayment penalties. It's for someone who wants to generally hold the property longer. You're not trying to flip a property. You're not going to do a HUD loan because it's going to take, if you're purchasing an existing,
Mm-hmm.
how long does that loan typically take, or is that not really?
Purchasing the existing?
Yeah,
Like,
purchasing it,
you mean an acquisition refi?
Yeah.
It's about the same as a regular refi,
like
5
five
months.
months.
Yeah,
So sometimes you may not have that amount of time. A seller, depending on the
that's
market,
right.
you may not. So that may not even be an option. But I think refinancing after you've acquired it is really an attractive option into the HUD.
Definitely. And BWE helps people with that. We can offer a bridge. We call it a bridge to HUD program, where we will do a bridge loan so that you can acquire the property and then refinance it as a HUD insured HUD insured
Oh
property.
yeah, so the bridge loan is not a HUD, but you underwrite it knowing that
They're
going
going to
to
convert
do
it
that
over
direct.
to the
Oh,
HUD.
that's so many great options. And both for our audience to learn about, and me as an apartment owner here.
Yeah.
It's great to learn about this. So you mentioned the if a property is green, if you can get a green certification, what does that mean?
Right. So about, I guess, 2017, HUD released updated MIP rates, the mortgage insurance premium rates. And previously, for a new construction project, those mortgage insurance premiums were 65 basis points. And for a refi, it was 60 basis points. So in 2017, they said, however, we really want to encourage, you know, people to have energy efficient properties and for residents to pay lower utility bills. So we want you to go out and design your projects to have a green energy certification of some kind. So Energy Star, NGBS, LEED, all of those types of energy certifications and many, many more are available that to owners who can get that for their project. And as an offset to that, or as you know, because you're getting such a savings on your MIP rate, HUD wants you to report annually what your utility usage is on those projects, so that they can make sure that they're staying below a certain threshold. Um, any kind of project that would have utilities included, that's just not going to work.
Yeah.
I don't know if you've ever dealt with any projects that had
Yeah.
included
Kind of
utilities,
master
but
metered. Yeah.
yeah, it's
It's
not
not going to
pretty.
qualify. Yeah. Got it.
But these newer, and actually every newer project that we work on gets the green certification.
Excellent.
It's not that difficult to get with the current building codes and energy codes. The IECC 2009 will get you there, or 2012, I think. Now they're looking at IECC 2018, I think. But just even standard building codes should get you there on the new construction.
The properties that Neighborhood Ventures buys tend to be medium to smaller size properties. We are getting some larger ones now, and I think a lot of early real estate developers start with smaller properties.
Hmm.
You had mentioned in before we started recording that there's only a 5-unit minimum for HUD.
Yeah.
So there is no minimum loan amount like you will often see with financing for apartment buildings. But you also said that it's pretty arduous to do a small apartment building with HUD. Can you maybe talk us through that a little bit? And is there a threshold as to when you would say, okay, we probably won't do that one, it's too small?
Yeah. So, and it's really a lender threshold, because it's the same amount of work to do a $5 million loan as it is to do a $25 million loan. Literally the same amount of work, and because they don't really have a small loan program at HUD, so the reporting costs and the time associated with it sometimes don't make sense for these very, very small projects. Also, we just get paid a financing fee that's based on the loan amount.
Yeah.
So when you're putting the same amount of work into doing a deal that's 25 million, a lot of lenders are not going to go really low. I would say that our lowest loan size is probably about $1 million to $2 million
Yeah.
that we will do. And that's pretty common for MAP lenders.
And
MAP,
that's pretty, that opens up a lot of options actually, if
yeah,
you'll do that size alone. Yeah.
right. The program that I work with HUD on is called MAP Multifamily Accelerated Processing. So a MAP lender is what I'm talking about when I'm talking about the type of lending that we do through HUD insured financing.
So you'll go down to as low as a few million. What are the average loan sizes you actually see in the program?
Most of my loans that I'm working on are 25 million and above.
Yeah.
We've probably seeing a lot more that are 50 million and above right now because construction costs and rents are really up a lot higher. We're still sizing things on the new construction side at 80% loan to cost, which is pretty amazing. And you can go up to 85%, but for us to still be sizing projects at the 80% loan to cost level that are supported, it's kind of amazing in this market.
Yeah, that is, this has been a very helpful interview because with all of the kind of negative stuff you hear about what's happening with Silicon Valley Bank and
Oh, yeah.
and the ripple effect of that as other banks have pulled back lending, it's exciting to understand and learn more about the backstop the government has in place. We have a great government. We're lucky that we have all of these resources, these safety nets in place, and this being one of them. And it's great to learn more about it. So this has been very enlightening for me. I want to pivot and question I like to ask. going back to the first question, if you're talking to that young college student who's trying to figure out their major, trying to figure out what to do with their life, what advice would you give them as they navigate their career and try to find themselves as an adult?
Okay, if they wanted to become what I do, underwriting or
I think in
real estate
general,
lending.
in general, how do they find, because you have a passion for what you do, you have a great depth of knowledge, I can tell you enjoy it. I think finding that is not that easy. So,
Yeah.
how do they find that?
Well, I would say if this is something that you're interested in, go to school for real estate finance or just an MBA with a finance background, and then do some internships and see if it's really what you want. There's I made it sound really fun today, but there's a lot of detail and a lot of background work and writing and so forth. And some organizations being an originator, actually going out and talking to people about, getting financing for their project might be a better fit than being an underwriter.
The originator's kind of the salesperson, if you will,
Yeah,
out talking to
right.
clients.
Yeah, but I feel like I'm very lucky to have found a career that suits me well, and I'm also lucky in that I've been doing it long enough that they're having me go out and talk to people more about the programs as opposed to just doing the underwriting,
Yeah.
which I also still do.
Well, this has been great. Wanted to thank you again for taking the time, and your company is BWE, and if we have folks who are listeners who are interested in getting financing, they can find you online very easily,
Yes,
and learn more about the loan programs that you guys offer.
absolutely. I'd be happy to talk to anyone who's interested, new project owners or existing property owners who just want to learn more about what we can do.